and prepare for the potential for a significant shift in the global financial landscape. Listen to the full version on the official dinarreport.com website and become our supporter on Patreon. Smart money and BRICS are rushing into gold. Wealthian, the 6th of February 2025. The global financial system may be teetering on the edge of a significant shift. Skyrocketing global debt, struggling central banks, and a seemingly paradoxical rise in gold prices, even amidst a strong dollar and elevated bond yields, are raising serious questions about the future of our economic stability. Recently, financial expert Jonathan Wellham joined Trey Rake of Bristol Gold Group to dissect these complex issues, offering insights into why gold is outperforming its traditional role and what potential pitfalls lie ahead. Their analysis paints a picture of a system under pressure, ripe with opportunities and fraught with risks. Historically, a strong dollar would typically dampen gold's appeal. However, the current environment is witnessing a decoupling. Wellham and Rake argue that gold is no longer simply reacting to currency fluctuations, but is behaving as a haven asset reflecting dwindling confidence in fiat currencies themselves. This powering over of gold suggests a growing distrust in the ability of governments to manage their fiscal responsibilities, leading investors to seek the perceived safety and stability of precious metals. The United States national debt, currently exceeding $36 trillion, looms large over the global economy. This unsustainable level of debt is arguably distorting market dynamics and creating systemic risks. Wellham and Rake highlight how this debt burden necessitates continuous borrowing, leading to a cycle of increasing interest payments and further compounding the problem. This unsustainable trajectory is forcing investors to re-evaluate their strategies and consider alternative assets. As concerns about the stability of the global financial system grow, sophisticated investors are increasingly turning to gold as a hedge against uncertainty. This shift in investment strategies signals a growing recognition that traditional asset classes may be vulnerable in the face of mounting debt and economic instability. The demand for gold as a safe haven is likely to intensify as these anxieties persist. The conversation also addressed the potential for increased market volatility. With rising interest rates, persistent inflationary pressures, and the looming debt crisis, the stock market faces significant headwinds. Wellham and Rake suggested investors should prepare for a period of heightened uncertainty and potentially adjust their portfolios to mitigate downside risk. They emphasize the importance of understanding the interconnectedness of these factors and their potential impact on asset valuations. Central bank credibility is also under scrutiny. The Federal Reserve's handling of inflation and interest rate policy has faced criticism, leading to a decline in public trust. This erosion of trust in monetary policy further fuels the demand for alternative assets like gold, seen as a store of value independent of government control. The future role and effectiveness of central banks in managing economic stability are now being questioned. The discussion also explored different ways to gain exposure to gold. While owning physical gold bullion offers direct protection against currency devaluation and systemic risk, investing in gold mining companies provides leverage to rising gold prices. Wellham and Rake debated the merits of each approach, highlighting the potential for higher returns in gold miners, but also acknowledging the increased risk associated with individual company performance and operational challenges. Finally, the impact of geopolitical tensions, particularly the potential for renewed trade wars under a Trump administration, was discussed. The imposition of tariffs and other protectionist measures can disrupt global supply chains, increase inflation, and further destabilize the economic landscape, driving investors towards safe haven assets like gold. These geopolitical uncertainties underscore the importance of diversifying portfolios and considering assets with inherent value independent of political maneuvering. The analysis presented by Wellham and Rake paints a concerning, yet crucial, picture of the current financial system. They suggest that the confluence of factors, unsustainable debt levels, central bank challenges, and geopolitical instability, is creating an environment ripe for market volatility and potentially significant economic disruption. While the future remains uncertain, the enduring appeal of gold as a safe haven asset serves as a potent signal, urging investors to carefully reassess their strategies. Listen to the full version on the official dinarreport.com website and become our supporter on Patreon. Source: Dinar Recaps.